If you trade in the ICT style and want to know what really happens in the market when a fair value gap is broken, this video is exactly for you. Here, we're going to talk about IFVG or macro FVG in the ICT course. This is where the first signs of smart money momentum convergence start to show themselves. Before we get into the lesson, make sure to follow me on social media, especially YouTube, subscribe and turn on the notification bell so you don't miss any of the new tutorials. Alright, now let's go to the chart and analyze IFVG step by step. Alright, I want to teach you about IFVG. Look, IFVG is a combination of FVG and the breaking of FVG, and actually IFVG stands for inverse fair value gap, which means the reversed FVG in the market. First, you need to get familiar with FVGs. Before we get familiar with IFVG, let me explain what FVG is. This is a classic two-candle pattern. In this particular scenario, because the second candle has turned bearish, it strongly indicates a potential downward move in the market. Essentially, this is a standard two-candle pattern, regardless of whether it appears during a sustained upward trend or a downward trend. It serves as a key indicator for traders to watch closely. The first and third candles do not overlap, and the second candle, with a lot of strength and momentum, sees a significant increase in buying volume. In this candle, the gap between the high of this candle and the low of this candle is formed. The fair value gap here is what we specifically call a fair value gap, or a significant market imbalance E, and that is exactly what this particular trading situation is commonly referred to as. In a downtrend scenario, it works in exactly the same way. That is to say, you are looking for a specific two-candle pattern. Now let me just take a moment to fix the color of this candle for you. You have a two-candle pattern where it is simply impossible to have this particular candle located here, which is the specific candle we are discussing. Meaning, these two individual candles do not overlap at all, and the visible gap that exists between these two candles, that is measuring from the bottom of the first to the top of the second. The low of this candle and the high of this candle, which also do not overlap, are in the middle candle. There is a clear situation where only sellers were present. This is also possible. In fact, this area is called FVG. Now that you are familiar with FVG, we want to see what central FVG or FVG is. There is an uptrend, and in this uptrend, I am currently in the process of analyzing an FVG, and right now I'm going to carefully draw this FVG out for you. Look closely at the screen. This is all of my FVG, okay? You can see that a specific range was successfully created in the third candle of the sequence. The second candle was formed, and now this is actually my FVG. Let me write FVG here so you know that all of this is my FVG. The price makes a move, and after that move, whether it was profitable or even if it reversed in the same area, it comes back to the FVG zone again. When it returns to this area, it has to break through this FVG zone. How should it break? If this candle enters the FVG and the next candle completes and breaks the FVG, I wait for the price to come down again based on this condition, and I observe the price action in this FVG area. Now I want to see what happens in this area after two candles have entered it. Now it can be any number of candles, but the point is that this zone shouldn't be closed with just one candle. Because if the FVG is closed with just one candle, that's what actually happens. I've explained a similar example in the BPR video in detail for you. Right now this zone is an IFVG zone, which is the same as the focused FVG. One of the things you can use to identify this is the 5% rule. Once you've determined that 5%, as they say, you can very easily use this strategy. Use it, and now, for example, assume that this 5% is the zone. Let me also explain the strategy to you. Now, after the price breaks this IFVG zone, it forms a trend again and returns to this area. Now, I need to analyze the price reaction in this IFVG zone to see if it can act as support and push the price up or as resistance. And actually, it will effectively maintain the current price level and push it downward. Now, a variety of different candlestick patterns and scenarios can happen. If our specific candlestick enters within this identified zone and simply is unable to successfully close above its own 5% threshold, My prediction is that this could act as resistance and push the price down. Push it down. However, if the market price enters my specific entry zone and actually manages to close significantly above the 5% level or even potentially above the IFVG itself, then I can confidently predict that this level has successfully supported the price action, and it could very likely push the overall price much higher in the near future. And this can also be a strategy. You can use it, and we'll see it together in the examples. So this was actually the IFVG that was completely broken, and it wasn't just by a single candlestick. That is, a combination of several candlesticks entered it, broke it, and closed below it. And we are waiting for the price to return to this zone, which now we can also see on the chart and graph. Let's analyze such cases together and go see a few examples. In this example, I am using the gold symbol, and on the 5-minute time frame, there is a bottom here. There was liquidity here, which was swept at this point, and it moved up strongly. As we can see, sellers came in aggressively and absorbed this liquidity. Now I want to see how the price action will unfold. Considering that this candle also opened, I realize that there is an FVG here. I am going to mark this specific level to observe closely exactly how the price action reacts to it. Myself, here, I'm waiting for an IFG to form and to see how the price enters. Let's see. With a few candles, it entered my IFG zone, but it couldn't. It still hadn't broken the IFG and closed fully above its level, but with this candle, it finally broke the IFG. In fact, the candle closed above my IFG level, and this area was established. This is the IFG area that I can now write here so we know where our IFG zone is. In which area has it settled? Now I'm waiting to see how the price reacts to this zone. I want to see if I can make a trade in this area or not. As you can see, it has formed a swing and is moving towards this liquidity up here, but it couldn't collect the liquidity. It only took out one liquidity, but it couldn't reach the main liquidity, which are these two. It failed to collect them and is heading back toward the IFG again. Is it moving? Let's see what the price condition does. Will it move forward? Can it penetrate this area or not? Well, as we can see, this candle that formed is a doji candle and all, which even tried to go below 50%, but it couldn't get inside the IFG. For me, I could have entered a trade with this very candle and set my stop loss right below this supply zone here at the very least. Up to these supply zones, hold my trade and take my profit. Let's see what the next candle looks like here. You can see I have one FVG here and another FVG here. A BPR pattern has formed for me. The BPR pattern is also quite similar to the FVG pattern, with the difference being that we have two FVGs back to back, stacked on top of each other. This is my BPR zone. I can again react to it. The price is on this zone. I can make my trade, and as you can see, there's a candle with a very strong body here, which has a very high wick. It has swept the entire BPR, meaning it has completely swept it. And it has gone exactly up to the FVG boundary. I came in, and considering that my previous trade was also a buy, I expect that at least up to this point, an internal break of structure will happen and it will take out these levels. I could have opened another trade here as well and set my stop loss exactly on this candle. I could have placed my stop behind all the candles and at least take profit 2 on this one as well. Now let's see in how many ways the price sharpness unfolds. As you can see, yes, with just two 10-minute candles, I was able to take 2 trades, each with both targets, and hit TP2. This strategy can also be very practical. Alright, let's go ahead and review another example together in this case. Once again, we're looking at the gold chart in this example. On the time frame of 5 minutes, some swings have formed, and in fact, this swing has also been broken, and a new high and a new low have been created. I want to see whether the price action is profitable or if it's going to reverse. Alright. Here, as you can see, there was an FVG. Exactly in the area of the previous swing, there was an FVG, and I mark its range completely and wait to see how the price reacts to this area. As you can see, this FVG was entered. That is, the next candle entered. The FVG came down to the 5% area, and I am waiting. Let's see. Well, now with this candle breaking, my FVG has turned into an IFVG. And now at these points I am waiting to see the price reaction again to this range. To review the IFVG, I want to see how the candlestick condition develops. Well, the first candle entered the zone, but it's not a candle that I can enter a trade with. I can't see any evidence for entering a trade. Well, here a doji candle forms for me. It does not reach the 50% area, but it does. The IFVG zone has finally been penetrated by price action. And with the formation of this specific candle, I can actually look to take my trade. I will place a sell trade right at the candle's close and carefully set my stop loss above the recent high. It's almost at the 50% area of that long candle, and I can at least expect this much of a reaction in terms of liquidity. Because I had a strong reaction at this level, I would hold it. But in the most conservative scenario, TP2 could be the target, but my prediction is that the price will at least move to this zone. As you can see, another candle. The price action also touched the IFVG zone. We can see a shooting star formation that was much stronger than my previous candle. At this point, I could even add more volume here and could have opened a new trade again to see exactly how many pips the price would move and whether our TP would be hit. However, it is clear that TP2 could have been reached very quickly in this specific zone, providing a great opportunity for profit. Considering that a lot of volume has been traded at the higher levels and the strong highs that were formed could have been considered even up to this point in time. And now let's wait and see if the market price eventually comes down to the lower limit. We want to observe whether after a few more candles form, it finally reaches that specific target area. If it does, our second take profit level, in fact, gets triggered very close to the 50% retracement level. Well, looking at the chart, the price seems to have a block at the end. It is moving slowly, but the overall selling pressure remains quite high at this moment. Well, here with this candle, the TP was hit and it could have even gone lower. But in any case, I highly recommend that you use this specific strategy and carefully analyze the markets. You should perform extensive backtesting so you can significantly increase your mastery over this exact strategy and this unique IFG pattern. Primarily because the IFG pattern is actually very similar in nature to the BPR structure. And know that because the BPR pattern can make a full FVG candle here and two FVGs can overlap on the IFG candles, meaning the IFG pattern is such that sometimes 2, 3, or even more of these FVG zones get filled and their conditions can be different. I hope you make the most of it. Have a great day. God bless.